Also on Sunday, China is replacing its business tax with a value-added tax or VAT system. It's an exciting change that is going to save a lot of Chinese businesses a lot of money. Beijing has extended its VAT pilot program to 4 more business sectors, namely property, construction, finance and consumer services. Now, almost all goods and services are covered by VAT. So, what's the difference between China's old business tax and its new VAT system? And what does the switch mean for Chinese businesses and economy as a whole? Yang Zhao takes a look.
Get ready for a big change right on the horizon in China. Goodbye business tax and hello value-added tax. But it's not quite as simple as that. For a very long time, China has operated a dual system. VAT has been long imposed on intangible goods, but services are instead subject to business tax.
In 2012, China started a pilot program in Shanghai to extend the scope of VAT to include a variety of services. The program has been gradually expanded from some cities to the entire nation, and eventually, business tax will be replaced by VAT across the board from May the 1st.
Let's take cafes as an example. Well, under the business tax system, the cafes are taxed on the basis of their coffee sales.
The sales include not only their profit but also their costs, like rental, decoration, utility, equipment, and coffee beans. But VAT works differently. The taxable amount excludes those material and input costs, hence as the name suggests, tax is levied on just the parts that's value added.
So for manufacturers and service providers, a VAT along with deductible cost is almost like an incentive program.
In the short term, the reform may have an impact on fiscal income. The government estimates that reform can cut about 500 billion yuan or $77.3 billion of tax for corporation by the end of 2016.
The reform will mostly affect local governments because business tax is a major source of income for them. But after business tax is replaced by VAT, which is collected by the central government, the question is how the tax income will be redistributed between central and local governments.
The VAT system itself is also changing. Before the reform, the fixed assets such as houses and constructions were not a deductible cost when you're calculating VAT, but that's no longer the case under this reform. Taxes would not have paid on these purchases. It would further lessen the burden of companies and encourage them to invest in more properties.
Consumption type of VAT, which allows fixed assets to be deductible, is a more advanced VAT. Companies can benefit a lot given the purchase of fixed asset is a huge capital expenditure. It will also boost the process of property destocking in China.
If a business annual sales are less than 5 million RMB and has been categorized as a small-scale taxpayer, the replacement with VAT system can effectively lower its tax payments by 40%.
On the minds of many is the question, can customer buy stuff at a lower price?
The reform aims at lowering the tax burden and injecting vitality into enterprises, but it's not targeting individual consumers directly. Whether to transfer profit to consumers will depend on enterprises themselves.
Yang Zhao, CCTV, Beijing.